Hello everybody, welcome back to my channel. I've got a great video for you today. Today we're going to talk a little bit about the top 5 common mistakes that I see active traders make. Active traders, day traders, the same thing. People who are trading multiple times a day or a week. There are some mistakes and patterns I've seen over my 20 years of dealing with clients in the financial markets, and today I'm going to share them with you. Stick around to number 1 because I'm going to count them down from 5 to 1. And number 1 is far and away the most common mistake, and it's also the most painful. Do number 1 and it could really blow out your account in a quick amount of time. So stick around and let's get into the video. All right, if you're new here, my name is Jeff. I've been working in the financial markets for around 20 years now and working with all types of, long-term investors, active traders, day traders, a little bit of everything. And over that time, I've gained a lot of knowledge in the financial markets across all the major asset classes. I've decided to start producing videos so people like you can learn from the things that I've learned over the last 20 years. I'm also a real keen saver and investor myself. Picked up some tips and tricks along the way and I want to share them with you. And if that sounds good to you, then why not subscribe to my channel? You get a lot more videos and up your financial knowledge and IQ and help you reach your financial aspirations. I also just want to make clear this channel is really not financial advice. I don't do this as a way to pass on financial advice in a financial advisory sort of setup. I'm really just producing these videos for education and entertainment purposes only. I'm not a financial advisor or a qualified professional. So please don't take this information in this video or any of my videos as being financial advice. If you need a financial advisor, seek out a qualified professional who is a financial advisor and they can help you. And remember, when you invest in the markets or anything else for that matter, your capital is at risk. So now that we've got that out of the way, let's get into the video. The top 5 most common mistakes that I see active traders make all the time. Let's do it. So the number 5 mistake that I see very often is not having a trading plan. Yeah, a lot of people get set up, they get a brokerage account, they log in, they launch up some charts, have a look at the news, see what's going on, and then start placing trades with really no other ideas beyond that. You want to have a plan in place. What markets are you going to trade? What sort of exit levels are you going to go in? What entry levels? How will you do your analysis? What sort of trading hours will you do? That's very important as well. Is this something you're going to do just randomly when you got a spare moment, or are you going to dedicate a set amount of time? Do you have the time? Do you want to be, 9 p.m. at night logging in and looking your position, say in the FX markets or the futures markets, which trade 24 hours? You really need to sit down and think about your plan, how you're going to do this, what you're looking to achieve, the analysis that you're going to do. Are you going to trade around macroeconomic data when it's printed? Because the markets can get very volatile. A lot of things to think about. So sit down, get a pen and paper, and just work out your trading plan and get the questions to all of those answers and then stick to the plan. My number 4 mistake that active traders make is just chasing the hot stock or the hot FX pair or the hot commodity, for example. The news headlines will drive this. And what I see an awful lot of people do, like what happened this week, Nvidia was down 7% one day and up 7% the next day. What did a lot of people do? They started chasing it. That's right, they bought it, and when they saw it come down, they sold it. So then they decided to go short, and then it went up 7% the next day, so they were taking losses. Just chasing this, okay? And there's a fear of missing out, and just some really, bad emotions come into play here. But it's mainly driven by the news headlines. And if you're going to trade around the news headlines and let that fear of missing out overtake you, you're bound to make mistakes. So don't go chasing any particular instrument. Don't do it because you're likely to lose money and you're going to be very frustrated. The number 3 most common mistake I see all the time with active traders, emotional trading. That's right, it can go in several different ways. The most common way I see it is when someone suffers a big loss, they then get really angry and frustrated. And then what they try and do is claw back that loss with a big trade. They got to dig themselves out of the hole. All of these sorts of emotions that come in, and it really starts to dictate their trading just too much. So don't do this, because what you're going to do then is you're going to get so far away from your plan that we discussed earlier. So you get your plan, you stick to it, and try and keep the emotions out of it. I've also seen a scenario where someone's made a great trade. They went short the Dow right around COVID, made an awful lot of money at it. Guess what they then thought? Well, they've got it all figured out. They know how to trade the markets. Finally, they've cracked it. And yeah, within a few weeks, trading around the Dow again, he gave most of that back. So if you have a big win, don't go thinking you've got the markets all figured out and it's all going to be wins from here. It just doesn't work like that. You got to get back to the basics, learn from every trade, a loss, a gain, whatever it is, learn from it. But leave it at that, move on and go forward, and don't try and, claw a big loss back, or if you have a big win, don't try and get really aggressive with your trading. You're only going to lose. All right, the number 2 mistake that I see a lot of active traders make is ignoring their risk management. If you don't have a plan, you probably don't have any risk management in your trading strategy, and this is a problem. You definitely got to have risk management in your strategy, and you've got to prioritize it. So what is risk management? Well, what sort of trade sizes are you going to do? One trade, how much of your account value or your trading capital are you willing to risk? A good rule is 2%. Yeah, so if you've got a $50,000 portfolio, for example, well, 2% of that is $1,000. So in theory, you shouldn't place any trades where your loss could exceed that amount. That's a great starting point. Stop losses. If you go into a trade, at what point would you put a stop loss on? Would it be 2% away from the market? Or is that a little too close? What about 5% or 10%? Think about your risk management and how you're going to manage your risk on every single trade, and then you need to stick to it. You need to bring the discipline into it. And only you could really do that and bring the discipline. But risk management is absolutely key here. What you don't want to do is blow out your account early and take lots of early losses, get totally discouraged, frustrated, and really just walk away from it thinking, oh, the stock market or the Forex market or the futures market is all rigged. Risk management, prioritize it and use it. I'm going to put some links down below to the CME, which is the Chicago Mercantile Exchange. They've got some good videos on risk management. Look in the description. I recommend you watch that to get the fundamentals down on risk management for your trades. The number 1 mistake that I see active day traders make all the time, and it's absolutely brutal one. Make this mistake, and unfortunately, you could probably blow out your account and be finished, and your trading career will be done. And that's not cutting your losses. I see it so much, it's unbelievable. But there's actually some psychology behind it which explains it. And it's very normal. I probably see it in 90 to 95% of the accounts that I look at and people I work with that are traders. So not cutting your losses, well, what really is behind that? So a few Nobel Prize winners have done some studies in and around this and loss aversion, and the results are pretty interesting. Basically, what they were able to conclude time and again, and loads of evidence for, is that for people, the pain of losing some money far exceeds the joy of making some. And therefore, when someone puts a trade on and they suffer a loss, they just absolutely refuse to accept the loss and to take it and to book it to their account. They just can't accept that they got it wrong, there's a loss there, and really the right course of action is just to cut the loss and move on to the next trade. They don't do that. So what many people do is they run with their losses and then they actually take a very small profit. And if you think about that, it's nearly impossible to make money. And I see this so often. I've literally sat with clients who felt joy and were clapping their hands at taking a gain of $200, $300, $500 while sitting on $100,000 loss on a position, but continuing to roll that over and over and just let it go. And those losses, those big losses, and a lot of times they just get bigger and bigger. So what happens is you need maybe 10 times as many winning trades to offset one atrocious trade that you've lost money on. So this sort of behavior is terrible. You've got to get control of it. And the way to get control of it is when you go into your trade, you predetermine at what point you're getting out, whether that's to the downside or to the loss or to the upside or to take a profit. You got to go into it with that mentality. And if you think about it, your gain should always be a lot more than your losses, right? Because that way you don't have to get as many right. If you place a trade and you have a stop loss 5% away, and you have a take profit 2% in your favor, well, therefore, you're going to make 2%, but chances are you could lose 5%. So you need many more winning trades to make up for it. Or if you did a trade where you had, say, a 10% stop loss and a 5% take profit, well, now you need 2 trades for every one just to make up for it. But a lot of people will actually start out with the trade, have a stop loss on, and then remove it as it gets close, thinking it's going to come back, and it just never does. In fact, it just gets worse. I've seen people with shorts on when the S&P 500 was down during the COVID. I mean, near the bottom of the COVID sell-off, people going short and have held on to it for a year or two waiting for it to come back. Unbelievable losses. So you don't want to do this. Some of the best traders I know, one guy in particular says fantastic P&L. He always said his number 1 rule is once he's got it wrong, whether that's 2-5% against him, he's out and that's it. He moves on to the next trade. But when he gets one right, he tends to let it go, sometimes for a while. And the winners will more than outdo the losses. So don't be afraid to cut your losses. Be brutal with it, because this can absolutely sabotage your trading. It's a big, big deal. So try and do that. Manage your losses, get out of them when you can, and just move on to the next trade. So that's my video on the top 5 most common mistakes that I see active traders make. I see it all the time. I've outlined them for you there. Number 1 is brutal. Definitely you want to have a look and not be doing that, but try and avoid these mistakes. It'll do you a world of good if you can avoid these, and hopefully you'll be a successful day trader. If you like the video, why not subscribe so you'll see more videos like this. Don't be afraid, share the video with any friends or colleagues, anyone that you think might benefit from this information as well to help them out. Give me a like, it really helps me out. I'm just trying to build the channel up now, and I got a lot more great things coming. So thanks for your time on this one, and we'll see you in the next one.